Right, guys, we have some awesome questions from aspiring homeowners. I think more people should be asking these next 5 questions before they even start looking at homes. So let's dive right into it. Here's the first question. If we are looking to move in, close escrow by late June of 2021, when is the right time to start looking? What would a realistic timeline look like for a Southern California purchase in this current housing market? Right now, it's currently the end of December. So if you intend to close escrow and move in by June of 2021, which is roughly 6 months from now, you probably should have already started looking. In a normal market, at least in the markets I work in, a buyer can expect to look at homes for maybe 2 to 3 weeks. That's pretty normal. And then be in escrow for about an additional 3 to 4 weeks. However, due to the limited inventory and intense buyer competition, it's taking a bit longer than usual for buyers to buy a home. You should be asking yourself if you intend to buy a new construction home or an existing home. They're different. New construction homes tend to be released in phases, which come out throughout the year. If you're planning on purchasing a new construction home, it might make sense to start hunting today. If you're buying an existing home, one that's already built, then you can expect a 21 to 30 day escrow. But that's if you're able to beat out the competition and be fortunate enough to enter escrow on a home. And that's what's taking longer, right? Finding a home, getting into contract with them. And even if you enter escrow, it's still not guaranteeing that it's gonna close. The point is, it's taking a lot longer to enter contract on a home. So starting right now would be wise. Let's go into the second question. What should we do in terms of preparing for our finance? I love this one. Preparing for our financing. My parents are giving us a cash loan for our down payment. Should we have them transfer this money sooner than later, or can they provide the money a little before open of escrow? Great question. Great question. Get pre-approved now. It's super important to know where you stand today as a buyer. What does your application look like today? A common first-time buyer mistake I see is buyers go out, they see homes without getting pre-approved. They don't know their DTI, their credit score, their monthly payments, savings, and they've wasted time and money looking at homes that aren't realistically under budget. A proper pre-approval, guys, will allow you to shop more confidently by answering questions, important questions like, what's my debt to income ratio? What is DTI ratio? Where is my credit score? Based on my credit score, do I qualify for any incentives? What's my maximum purchase price? What are the corresponding monthly payments? Guys, you want to be able to comfortably afford that amount. The monthly payments, that's a really important question you want answered before you even start the home buying process. How much of a down payment do you need? What about closing costs? This is really important to ask yourself before starting the home hunt. Don't be afraid to run your credit, get pre-approved, know the numbers, put on paper, look at everything objectively before you even start looking at homes, okay? Third question, what incentives are there for first-time home buyers, if any? Do you recommend taking advantage of said incentives? First-time home buyer programs went away when the pandemic first hit, but they're slowly coming back. The reason they went away is because lenders don't want to repeat what happened in 2007, 2008. So what they did was they increased their lender overlays so that only the most qualified buyers could borrow money. Anyway, many programs are back, but they're not popular in areas of high interest. And here are 2 reasons why, and it makes sense. Place yourself in a seller's shoes. If you're selling your home today and you have 10 offers to choose from, will you choose the buyer who's the most financially qualified? Or would you choose an offer knowing they need help through a first-time buyer program, such as a down payment assistance program? Well, most sellers are choosing the former. Now, I'm not saying first-time buyer programs are non-existent in our markets, but I'm saying they're more common in areas where people aren't necessarily buying, right? The second reason, they typically take longer to close. In our markets, it's taking about 21 days to close escrow. First-time buyer programs are known to take much, much longer, roughly 40 to 45 days, and sellers want quicker closings. So they're more reluctant to choose offers which have longer escrow periods, unless that's what they're looking for, okay? Next question. How much do you recommend putting down as a first-time home buyer? Another great question, which you should discuss in depth with your mortgage broker when you do get pre-approved. The answer to this question depends on a multitude of factors, such as your current financial situation, local real estate market conditions, your specific real estate goals, short and long term, and so forth. Guys, there are benefits and drawbacks for both putting a lower down payment and putting a higher down payment. You'll get a better understanding of which route is best for you when you're able to run the numbers and look at your options objectively. That's super important because buying a home can be such an emotional journey. And with that said, a majority of today's buyers fall into one of three categories: FHA, VA, and conventional. Let's begin with a conventional loan. What is it? What's a conventional loan? Well, it's a mortgage loan that is not insured by the government. And, they're typically fixed rate and term type of loan. Conventional loan programs are very popular for borrowers with good or excellent credit. A big advantage of choosing a conventional loan is that this program generally presents fewer qualification hurdles than FHA or VA loans. In addition, lenders can typically close these type of loans, conventional loans, much quicker than FHA or VA loans. It's also a popular loan product for borrowers purchasing a second home, such as a vacation home, a rental home, or a property to fix and flip. Now, what are the drawbacks? A drawback for using a conventional loan is you'll typically need to have excellent credit to qualify for the best mortgage rates, meaning although you can qualify for a conventional loan with a 620 credit score, the best rates are offered when you have between a 740 and a 760 credit score. In addition, in order to avoid the dreadful PMI, private mortgage insurance, the borrower must put at least 20% down on the purchase. Okay? Let's talk about FHA loans. FHA loans are another common mortgage loan program available to buyers. And unlike conventional loans, the Federal Housing Administration, FHA, they don't lend money. Instead, the FHA insures the money lent in the event the borrower defaults on their loan. What does default mean? Meaning you stop making your mortgage payments. Now, this loan program is popular for borrowers with lower credit scores. The minimum credit score is 580. And for borrowers with smaller down payments, the minimum down payment on an FHA loan is 3.5%. In fact, the minimum credit score could be between 500 and 579, but the minimum down payment would have to increase from 3.5% to 10%. Okay, what's the drawback? A drawback from using this loan, FHA program, are the two mortgage insurance premiums. There's an upfront premium of 1.75% of the loan amount, which is due at closing, in addition to the annual premium, which varies depending on the terms of the loan program the borrower chooses. For example, the amount of down payment. In order to eliminate the insurance premiums, the borrower must refinance the loan or pay it off. Something else to keep in mind is that there are FHA mortgage limits, meaning there is a limit or a ceiling as to how much money one can borrow. Okay, and these limits vary, so check with your mortgage lender with the latest limits. But as of 2020, the FHA mortgage limit for the majority of the country was $331,760 and $765,600 in high-cost areas. Finally, VA loans are available to our active service members, veterans, and their spouses. This loan program makes it possible for the borrower to put 0% down payment. No minimum down payment. That's pretty awesome. A requirement, however, is that the borrower must occupy the home as a primary residence. What does that mean? Well, it means they have to live in the home Okay. Also, there's an upfront VA funding fee of between 1.25% to 3.3% of the loan amount, which can either be rolled into the loan or paid for by the seller. In addition, unlike FHA, the VA only guarantees a portion of the loan amount, not the entire amount. This means a borrower might be subject to additional requirements from the lender they choose to work with. Now, guys, all three loan programs discussed have their share of benefits and drawbacks, of course, just like anything else, right? And in order to determine which one best suits your desires, your real estate goals, my recommendation is to speak with someone you trust who's a mortgage broker. Okay, and that's why getting pre-approved early in this process is so important. They're going to help you determine if you meet the necessary requirements and help guide you in the right direction. That's super important. All right, next question. What is the benefit of going with a buying agent instead of doing it via Redfin or Zillow or contacting the listing agent? Guys, listen to me right now. Do not go direct to the listing agent. The listing agent is employed by a homeowner to represent their best interests, which typically involves getting the highest price and the best terms from the sale of their home. It wouldn't be wise to ask them to represent you on the buying side when they're trying to get the highest price and best terms for their seller, their client. The seller typically pays all the commission, so why not hire an agent to help you navigate the process, which includes, all the real estate contracts, which is legally binding, and fight for you when it's time to negotiate. They're going to take care of everything for you. The earnest money deposit in my market here in Los Angeles is typically 3% of the purchase price. So on a $500,000 home, your deposit is $15,000. You need to make sure you trust your broker, because in the event of a breach of contract, if you don't know what you're doing, if you don't hire the right person, that can cause you to lose that deposit. So whether it's Redfin, Zillow, guys, the company of the real estate broker isn't as important as the actual person representing you in the transaction. Right? It doesn't matter. That person could be with the biggest brokerage in the world, but if he or she doesn't have integrity, ethics, knowledge, experience, and everything else that rounds up what an amazing agent should be, then that person isn't the person you should be hiring. Make sure you're hiring an agent someone you like, hopefully, and someone you trust. An agent that's going to fight for you even when you're not around. An agent that cares. All right? Guys, these are awesome questions that I think every home buyer should be asking themselves before they even start looking at homes. So hopefully you found these super insightful. If you have any more questions, let me know. I'm going to do a few more of these videos. Cheers, guys.